So who has a question about Bitcoin?
I mean, miners, in a way, it's like the new banks, right? Because they produce Bitcoins, and they can keep it from transactions. They're like the clearing houses.
Okay, so that's a good question. He asked about Bitcoin miners, what they are exactly, and whether they're like clearinghouses or banks. They're not exactly creating new Bitcoins. There are a limited number of Bitcoins that can ever be found in the system. There's 21 million that have already been set as a number that exists. So Bitcoin miners, their main purpose is not necessarily to create new Bitcoins, but to verify all the transactions that happen in the ecosystem. So they're mining Bitcoins. Mining isn't exactly the best analogy for it, really. They're just verifying all the transactions that come through and earning a small percentage of it in reward for their verification. And that, in turn, puts more Bitcoins into the system for people to use. So I don't know if that helps make sense.
I mean, that's what clearing houses do in like normal financial systems. Like, they verify a transaction between two parties.
Right, but unlike a bank, they don't control the flow or the supply of Bitcoins. Yes?
Also, clearinghouses, they hoard trillions of dollars of asset in order to conduct these transactions. Miners do not, so they are not clearinghouses.
Right. Miners do not hold any of the Bitcoins themselves. They are merely running the software in order to see the public ledger that everybody else can see and verify that these transactions are, in fact, correct.
And how can you become a miner?
You buy the right equipment and download the right software.
You're not gonna like become an instant millionaire if you become a miner, because typically with what the price of Bitcoin's at right now, paying for the power that would be required to run a mining software and things like that is...
You're not actually going to end up making... You're making like a fraction, like a Satoshi a week doing this, which is like the smallest fraction of a Bitcoin.
So what is preferred, buying or mining?
It's not one or the other. Mining is an absolute necessary service that we need. We need enough people in the system to be verifying this. That's what makes Bitcoin decentralized, is that there's a ton of machines out there that are all verifying the network at the same time. So we don't need to have a central party like a bank or a clearinghouse. So that isn't a necessary part of the ecosystem, but if you want to participate, you don't have to mine. You can just buy and spend and use Bitcoin.
With distributed computing in view, what you're lending is the computing power of your computer, or space on your hard drive to become a miner.
Right, to host a copy of the ledger so that you can verify all the transactions that are happening. Yeah.
What happens is, like, for example, the network is down. Like, we lose all record from the Bitcoin, like a war between the US and China or something big like that. Like, everything is just disappeared because there's no more internet and there's more.
So you're saying what happens if the internet goes away?
In an apocalyptic scenario where the internet is destroyed, yes, Bitcoin.
Okay, in an apocalyptic scenario where the internet is no longer existent...
It's not so apocalyptic. Like 50 years ago, US was in war with Japan. Like, that's things happen.
So yes, Bitcoin does rely on the internet to function, but I don't think we're in any danger of the internet going away anytime soon. The point is, the internet's not going away. If it does, yes, then we would be screwed in many ways beyond Bitcoin dying. But I don't think we're in danger of that whatsoever.
If you really believe the internet will go down in the next couple of weeks, then this probably isn't the currency for you.
So the question was, is multi-factor safer?
Multi-factor authentication. Why only passwords? Why not multi-factor?
I mean, multi-sig is the future. This is kind of a simplistic version I gave. But multi-sig is the future, like biometric multi-sig, where it's tied to your EKG and some other stuff as well. That's what I really see the future being. Is you've got a private key split between 5 different authentication methods.
So which one are you using currently? Only password.
So we're only password at the moment. But we have 2FA, two-factor authentication.
How many characters in password?
Mine?
Or how many characters are mine?
We don't cap the limit. Mine's like 2 sentences long. So
I tested a blockchain wallet with a 300-character password.
So I bought Bitcoin through Coinbase before, so it's very easy. would you recommend the custodial versus non-custodial? Would you recommend kind of using that as a purchase, maybe use that as just like a checking account and then offload it to a blockchain where it's more of a secure savings in a sense?
Yeah, so Coinbase is a good on and off ramp into the Bitcoin economy. Blockchain doesn't provide any resources to buy or sell Bitcoins. We're just the best wallet resource out there. So I recommend storing your funds in a couple different wallet services just to distribute your risk. But blockchain is one of the most secure out there and one of the longest lasting.
Yeah, compared to a bank, when we put money in our account, they play with our money.
That's right, fractional reserve banking.
So putting our money, our Bitcoin money on wallets like blockchain, this thing couldn't happen. You can't speculate with our funds, right?
That's right. We don't have control over your funds. We can't access any of your funds because we don't have authorization, aka the private key, or the password to decrypt the private key. Well, we store your encrypted private key on our servers, but your private key is decrypted in the browser. So we can't control your funds. We can't access your funds. We can't lend those funds out like your bank does. With traditional banking systems, there's only around 5% of all deposits on hand at any given time. The slide I showed earlier was a bank run, where everyone goes to the bank to get their funds, and then they realize none of the money's there. Only 5% of it's there at any given time.
A couple of questions. So you have a gateway system where you have different people running gateways on their phones. And I'm guessing all the transactions go through these gateways. What happens if I run a gateway and I already see these transactions coming in? I can spoof them and say that, oh, I'm actually one of the end people who transacted through me, and use their identities to do a bunch of fraud.
Oh yeah. We've gone through a lot of steps to make sure that it's very safe. The first line of defense is the fact that we have 2 levels of authorization. The first level is through SMS. So when you send an SMS, it's like sending an open letter. It's very unsecure, but when you receive one, it's actually a little different when it comes from a different source. So we use a send and receive code. That is your first level. So, and then we after the $12, it's a $12 limit of how much you can send per transaction. We actually call you from one of our servers. So that message isn't coming from the gateway, Android gateway itself. You're getting a call from the server, and it's through phone, so it's not saving the buttons that you press, and it asks you for a 4-digit PIN that you've already set up that's in your head. So it ends up being a very poor man's way of 2-factor authorization.
But talking about SMS payments, which is exactly what the banks have been implementing it for the last 10 years, and the most successful story is M-Pesa Kenya. So we're talking about Fatima in this case. Has the money reached her? Have you reached that level today?
One thing to remember about M-Pesa is that it's run by a company called Safaricom, which is owned by Vodafone, which is the cell phone monopoly in Kenya. So they said everyone can have mobile money if they use our system, and that's it. But if you go to any other country, like the Philippines, they have GCash Smart Money and like 2 other ones, and it is not successful there at all. They have not reached critical mass. They have not been able to. People don't want to sign up because they don't want to sign up for one system and then go to another system, because there is a lot of friction to becoming a new customer. And so, but with our system, we are cell phone company agnostic. Yeah, M-Pesa really was successful because they had really great marketing, because in the neighboring country of Tanzania, they rolled out the exact same sort of system, M-Pesa, but it did not do so well. In fact, the Gates Foundation gave a grant to a marketing company in order to re-roll out the M-Pesa system in order to make it more successful, which eventually it did. But the key point here is that we are not doing the marketing for these our different partners. We have partners in each countries. So we expect them, because they are local, they know their banking rules, they know their customers, they know how to market to the particular people. I can only be in one place at one time, but they can be local in their country and talk in their language and in their culture and reach them in a much more effective way than we can.
What's up with the number? I mean, there's 37 signals, and it can mean a lot of things. What's up with the signals?
We should put the explanation for the name on our website. Okay, so in 2010, Satoshi Nakamoto wrote in the Bitcoin forums he was trying to explain to someone what is it like to mine a block. And his explanation is that mining a block of Bitcoins is like flipping 37 coins and having them all turn out as heads. I don't know if you've ever tried to do that, but that's very difficult. And so what we're trying, but the thing is, like, the difficulty of doing that is astronomical. And if you know anything about Bitcoin mining, that happens every 10 minutes. So we wanted to sort of imply that we try to make the impossible possible.
What is the fee for your transaction?
So the fee for transaction depends on where you're sending. So if you go from one country to another country, the country where you send the text message from, they're the one that we consider as the transaction processor, and they send the message to the other gateway. So whatever the fee is, the fee of the sending gateway, that's what it is. Right now it's a flat fee. So if you send like 50 cents to $500, it's the same amount. Generally, the fee is around 5 cents to like 30 cents.
So the partnerships that you have with the off-ramps in whatever country you're sending things to, do you have any control on how much they charge for turning a Bitcoin into local currency? Or could they really make up the differential and make it, Western Union prices by the time it's done?
It's up to them, because it depends on the liquidity of your country, and the liquidity of your country is dictated by how many people are buying and how many people are selling, and the spread between each. So if you're in the Philippines right now, the spread is actually pretty small because there's a very high volume of Bitcoin that sells there. Right now they have like 4 different exchanges, or 4 markets in one exchange. But if you go somewhere, I don't know, like somewhere where it's banned, like Vietnam, or it's not banned, it's just kind of weird there, like the spread's gonna be huge because no one's buying and selling there. So we can't dictate any of that, but we can work with them to help bring more Bitcoin into their country, so that will help their liquidity issues.
Yeah, so crypto to crypto does not require any FBAR. It's only when you're holding national, foreign currency, and Bitcoin is not recognized as a foreign currency by the IRS. No, Litecoin, Dogecoin, or whatever, any of those types of, I don't want to call them copies of Bitcoin, but most of them kind of are. Those, exchanging between those is never recognized as a foreign currency, so it's not taxed. Different cryptocurrencies, and gained with that would not be a taxable event, but then selling the Bitcoins for dollars would be a taxable event. And also purchasing directly with Bitcoins also is considered a taxable event. You're realizing the gain. So if you go on Overstock or Newegg and buy a computer with Bitcoins, that legally counts as selling the Bitcoins for dollars and is taxable by the IRS.
What do you think about all these, the inflation of new cryptocurrencies? And do you think anyone stand a chance? Or?
Yeah, so there's a large... Oh, so the question is, there's a lot of alternative cryptocurrencies, some people, altcoins. Since Bitcoin is open source, anyone can download, go to GitHub, download the source code, change a couple numbers and names, and you can make, Fred coin or Jim coin or whatever coin you want quite easily. And there's actually sites that allow you to do it. The vast majority of them are fairly worthless because, well, it doesn't do anything Bitcoin didn't, so why not just use Bitcoin? On the other hand, there's a lot of interesting research going on and people trying to do new things. So yeah, I'm generally quite skeptical if someone says, "Oh, I've got this new thing that's like Bitcoin but better." Yeah, I'm very skeptical. At the same time, there are a lot of smart people working on improving Bitcoin and trying new things. So it could be worth looking into.
How do you know it's not just pure speculation for people entering just to win money?
Yeah, a lot of people probably do buy it just because they think it's going to go up. That's fine, whatever. The way the Bitcoins are released was sort of set in stone in 2009 when the protocol was created. So it's about every 10 minutes, 25 Bitcoins are released. And yeah, 25 every 10 minutes. And you can watch it. If you go to blockchain.info, you can see the blocks and they come up. It's a sort of randomized process in that it's not every 10 minutes in a nice way. It's sort of all these different nodes using it. So on average, it's 10 minutes. And actually, because of the increase in amount of users, it tends to be more like 9 minutes. because it's going on an exponential increase right now. But to a pretty good approximation, every 10 minutes, 25 Bitcoins are released. And sometime in 2016, that will drop to 12.5 Bitcoins every 10 minutes. So it's that sort of curve of how it gets released. So half of them got released in the first 4 years. Now we're in, a fourth gets released in this 4-year block, then an eighth, the 16th. And eventually it will decrease to a sort of negligible amount and finally zero.
What about the data mining of the companies, like insurance companies that want to see what you're doing?
Yeah, so Bitcoin, it's not as anonymous as you might imagine. You can try to cover your tracks, but if there are ways to sort of analyze all the transactions in the Bitcoin network. I don't really know what peak Bitcoin would happen sometime in 2100 or so when the last little fraction is mined. And yeah, a lot of Bitcoins have been destroyed by people screwing up and losing private keys. So I guess long term, eventually you could start to run out, but it's very divisible. Each Bitcoin can be divided into, I think, 100 million smaller atomic units. So there's a lot to go around, and this is sort of a multi-century problem at worst. So that's not something I would worry about. But yeah, it might not work for more than a few thousand years.
No, the peak is when you can't mine. It gets harder and harder.
So the difficulty is a function of how many people are using the network. So difficulty can go down. It could be if everyone if everyone stopped mining Bitcoins, it would become much easier to mine. So that's independent of time or anything like that.